I'm Peter White. Welcome to the Inside Network. Welcome to another edition of INDepth. I'm Peter White, and our guest today is David Moberley from Paradice Investment Management. David is the lead portfolio manager for the Australian Equities Long Short Fund. Welcome, David.
Thanks, Peter. Thanks for having me.
And good to see you. Can we start by talking about the 130-30 strategy that you adopt? Can you explain the premise of it?
Yeah, so 130-30, or sometimes called an active extension product, is a long-short product for someone who's really looking to maintain their market exposure. So when people talk about a 130-30, they're really referencing the fact that 30% of the assets are typically sold short. The proceeds of those, the cash proceeds from that is then reinvested back into the long book, hence the 130-30, and you're looking to maintain a beta to the market.
Value or growth or both, which do they all play a role in a long-short strategy?
Yeah, we would describe ourselves as style agnostic. We think we can generate alpha out of both value and growth markets. And the Australian equity market is quite concentrated, and it is very difficult to align yourself to one of those two.
A lot of people are talking about value at the moment, are pivoting or have pivoted. Are you in that school or not?
Yeah, absolutely. I think the medium-term view is that we will see a reopening of economies and there will be a reflation event, and eventually that will lead to some level of inflation, and this will cause some of those longer duration names to be rotated into some of the more cyclical value names in the market.
You mentioned concentration risk, which is associated with the Australian market indeed. Can you explain the unique benefit of a long-short approach with a highly concentrated market like Australia?
Yeah, so as you highlight, Australia is one of the more concentrated markets globally, and what I mean by concentrated is that there's a lot of big sectors and stocks that dominate the top end of the market, and then you have a huge long tail of very small weights or very small sectors. So a company like CBA, for example, is 8% of the benchmark, and Star Entertainment, which is a casino operator, is only 20 basis points of the benchmark.
What do you see as the biggest opportunities in the Australian market at the moment?
Australia is a cyclical market. We've got a lot of exposure with some big banks and some big resource companies. And I think one of the things that's interesting at the moment is that the banks have been very difficult investments for a long period of time. Like yield curves have been flat to downward sloping for a significant period. And they've had significant costs, and they've been very difficult from an investment point of view. I think in the short term from here, actually things look a lot better for the banks. So the property market actually looks relatively good. The banks have provisioned quite heavily for what they thought was going to be quite a big downturn, which hasn't really eventuated. And the stimulus measures provided by the government have provided a lot of support and cushioning to the domestic economy. So banks actually look quite interesting for the first time in a long time.
They've come back in favour, and you're agreeing with that point of view by the sounds of it.
Yeah, absolutely. I mean, they're not as cheap as what they were.
And their yields are low, but looks like there's hidden yield in it.
Absolutely. So I think from here, you wouldn't expect a significant re-rate. So book value, they're kind of back to long-term book value. But I think what you can see is as the earnings recover, payout ratios can increase and the dividend yields look quite attractive on a medium-term view.
On the other side of the coin, where do you see the biggest risks in the ASX?
There's a lot of risks in some speculative parts of the market. Retail has been a big component of what's driven the more recent rally. And we're quite concerned about some of the valuations we've seen in some speculative pockets in the market.
And COVID, what's your view on COVID and the market where we are now in early 2021?
So we've seen a big recovery off the bottom. Unfortunately, markets seem to have priced a lot of that. So the markets is actually quite expensive on a 1 and even 2 year forward-looking basis. So a lot is actually priced in, and we do need to see some of the earnings growth come through. But I think our base case is that there may be some delays, but vaccines appear to be coming through, and we're positive on a 12, 18 month basis.
Can you talk us through how you identify some of your long positions, your core long positions? What's your process for
Yeah, absolutely.
coming to those decisions?
Absolutely. So we're fundamental investors. So that'd be the first thing I'd say. So what we're trying to do is find good companies that have a strong position in their industry that they're operating in. That industry is ideally quite attractive. And when I say attractive, I mean it can grow independent of any cycle. We want to see a good balance sheet, and we want to see that company able to generate strong cash flow. We want to see strong management team and a constructive board that's supportive of minority shareholders. And finally, we want to be able to buy at an attractive price.
Now, CSL is one of your main or core holdings. Can you talk us through the thesis behind that holding and that point of view?
So CSL, as you said, it's been a core position in the fund for a long time. CSL's the lowest cost operator and the industry leader in almost all of its markets. It operates in a very strong industry, and it ticks all of those boxes that we previously mentioned. It's got a great balance sheet, it generates heaps of cash, and management are very strong. And at the moment, it's actually being offered at a very attractive price. The market is quite concerned about the impact of collections on the business. So CSL sells a lot of products that are fractionated from plasma donations. And at the moment, as you could understand, in the US, there's been quite a downturn in people turning up to donate blood. We believe this is quite a transitory issue, and actually when things recover, things will normalise, and when that happens, CSL is going to be looking extremely attractive.
Do you place that in the value category or?
Yeah, it's interesting because typically you wouldn't think of CSL as a value stock.
As a growth stock.
That's right, as a growth stock, but at the moment it's been priced like a value stock.
The perennial topic of ESG, it plays an important role, I understand, in your stock selections and your operations. Can you talk us through that?
Absolutely, Peter. So Paradice is quite a big player in the Australian funds management industry, and we take that role quite seriously, and we know that comes with rights and responsibilities. And we're actually a signatory to the PRI. We've got a head of ESG who engages with management and boards as we do. And we look to use that power that we have positively for change as much as possible.
But it also obviously highly informs your stock selections, is that correct?
Yeah, absolutely. So companies that typically don't do the right thing underperform, and we know that. So it's a big part of our process.
Are short positions even more important in today's market with such low interest rates?
Yes, they are, but I think short positions are always important. I mean, we've found through our experience that we've been able to generate alpha both in up markets, in down markets, in value, in growth markets, and there's always parts of the market that are challenged. We've found that there's shorting opportunities all the time.
Finally, what's your outlook for the Australian market as we head down 2021?
Yeah, so 2021 should be a good year. So we've got vaccines being rolled out. The economy looks in good shape. The challenge is, I guess, as we discussed earlier, that there is some pockets of the market that are quite expensive, and overall the market is pricing in earnings to recover. So it does look like the picture is quite good, but it needs to be given what's priced in certain pockets of the market.
Does the China situation worry you at all?
Yeah, it does. That's probably Australia's biggest challenge. It's it's a challenge for multiple parts of the market, and we've seen them in terms of the relationship with China be stretched. But I think over time we can come to a good understanding of there's positive relationships, opportunities on both sides given what we offer and what they offer.
It's not all doom and gloom.
I don't think so.
David, thanks for talking to us today.
Thanks so much, Peter.